Hey, good afternoon. This is Trader Tim from over at eminimind.com doing another Thursday market analysis video, December 10th, 2020. I wanted to walk through some of the setups this morning in the ES. The last couple of days have been particularly challenging. Earlier this week, Monday, we did a masterclass and kind of walk through all of the ins and outs of my day trading strategy for the E-mini futures. So I'll put the link below this video if you do want to get a copy of that recording. Before we jump into the ES though, I'll just run through the swing trades that I have going on. I put Autodesk on a break above highs earlier this week, and we dropped today just down to where I've got my stop below the swing low here. So as of right now, we're sitting in a double bottom. We'll see if that can get some upward momentum here off of today's bounce. I also have a Home Depot above the high on the hammer here, this little dragonfly doji. Couple other ones that I've still got on, MMSI. If we can move higher above today's high tomorrow, then I would be okay with looking to bring my stop underneath this next swing low. And then the other one, Aqua, still kind of sitting in its sideways, all of these candles being inside this bigger body on the gap down. So I'm actually long this one, and my stop's just below the gap here. So we'll see if that one does anything. I've got some SPY puts that I put on yesterday at the open on the gap up. Anytime that I'm anytime that we have a strong run up in the broader market, I look to put on a bit of a hedge when things are really looking good, and especially because we're so close to the negative 23% target. So if we look at the Dow, it is actually sitting at its target, and we had the earlier on this day here on the 7th, we broke below the prior candle's low, and that kind of sent a red flag that we might be in for a bit of a pullback. And then since then, we've really just gone sideways along this negative 23% target. If we go to the Nasdaq, uh, essentially the same thing, not the larger retracement negative 23. That's up here, a little bit higher. But this kind of secondary retracement that traded back at the beginning of November is at its target. And then the last being the Russell, the strongest of the bunch. I don't even have a retracement on this guy. I mean, even if you went an extension from high to high, you're pretty far up here. And so if we go back to the S&P, we can see in here we did have it was a small gap up here yesterday, but I had a couple of contracts on the 7th when I saw the Dow break, and then when we gapped up, I put some on there at the open, uh, with the thought process being, okay, yeah, if we go a little higher, no big deal, because if you look at the distance from 371 to 373, $2. But if you look at the distance from 371 down to say 361, okay, 10 bucks, and we would still be in the context of an uptrend, even if we traded down to 361, because this is the prior swing low. So even as a 3-day pullback, we would still be in the context of an uptrend. But if something bigger than that materialized, that would be enough to put those options, well in the money and have a nice hedge going. But if something more materialized, and let's say we sold off to the 50% retracement, then you're positioned to capitalize on that move down, and at the same time you would expect to see a rise in the VIX. Now today we didn't have that, and we also have not had a very strong breadth and advanced decline line in either direction. So if we shift over to the ES, you'll probably notice my chart looks a little bit different. I made the 50% yellow just so it would stand out a little more. I had a couple comments from the last handful of videos that it was a little bit hard to see the lines on my retracement. So I just made that 50% yellow, and that seems to make it a little bit more pronounced. Now I should say, I guess before we talk about the ES here, typically this coined phrase Santa Claus rally going into the Christmas holiday, uh, it's not happening. It's just that we're not screaming higher. I mean, if you look at the beginning of December, which was here, I mean, we're basically sideways. We had a little bit of a lift, but as of this point on Thursday, 10 days in, we're basically where we opened. So uh, we'll see if we can get a little bit more of a lift up to the negative 23% target. As I said in Monday's video, we've got vaccine potential catalyst. We have a handful of IPO that just kind of adds hubbub around the markets, chatting around the stock market. You've got Tesla, which has been, hot for non professional traders to be active in the market. And so you have a lot of players coming to the market that may not be here. You have a lot of people chasing the market because they're, you know, Uncle Jimmy has made a bunch of money in Tesla, and they were chatting about it at the Thanksgiving holiday, and then, well, I got to get in too because it's a sure thing way to make money. And when you get in those situations, that's when you get the big drop offs. Like if we go to Tesla for a minute, and back in June, you have this massive run up, and then this last kind of exhaustive push up, and then kind of the bottom falls out, and you get that big dip. And so, not saying that Tesla's not going to go any higher, but it's something that I watch out for as we get from sort of a shallow uptrend to a more steep uptrend. And so that is how I played. That's why I decided to put on the SPY puts up here. And again, they're super cheap because nobody's thinking short. Everyone's thinking, oh, the markets can only go up. And so that's just a very kind of a red flag scenario. If we were to come up and move higher and break highs, well, then we just close out the hedge. I'm not going to hang on to it till expiration and let the contracts be completely worthless. So it's you want to balance the reward and the risk, the reward potential with the risk. So let's talk about the ES for a little bit. Like I said, the last couple of days were pretty challenging. We had not a strong market internals at the open, and then a lot of sideways action, shortly thereafter. Like if you look at the whole, first 2 hours of the day, you have these two 15-minute candles that moved higher, and then we moved sideways. And if we even zoom down a little more to the 5-minute and just come in here to the first couple hours of the morning, playing the move up, well, a lot of it occurred before things really even got going. Like this whole run up of green here was just in the first 10 minutes. And then things really kind of flattened out. I mean, yeah, there's some undulation here, but by and large, this gray line is the high for the first 30 minutes, and then we just kind of undulated above it and below it for the next couple of hours. So today I put a short on just below about a touch of the of this 30-minute high, and drew it up like this, and then trailed it down. It only went for one leg, if you will, or two legs, two measured moves, or one measured move, two sort of steps down, if you will. So I just trailed my stop behind the 36.70. So I really didn't get much going on that one. And then we had a little bit of a interesting situation happen here. So this 50% is the high, or is the using the high as my anchor point down to lows of today. That's where this 36.77 and a quarter comes from. And we had a high tick here at 808, and then we had a nice little break of a swing low. So I actually, and we were, so that high was a 75 and a quarter. So it was 2 points away from that halfway back short. And I actually went ahead and put on a short there because we had the little double top and it was a small setup. Thought process being, well, we're within 2 points. Normally I say if we're within 1 point, I'm okay going. Getting a little bit aggressive. I chose to take a stab at it, and that one took me out. We poked above highs, and then from there, we just kind of moved sideways for a while, and then we had that awkward dip where we didn't make a full 50% retracement long. We just kind of dipped a little bit back into the first 30-minute range, and then we made it all the way to the 50% retracement. And then, same kind of thing. We touched at the 50. You can draw up the short. It was a little bit sloppy, but it did get a first target, or get it made one leg down, like it completed from the 50 to its first negative 23% target. And so then if you were to draw up the second retracement, that one failed. So again, not really any follow through. And then we touched again, and then sold off, and then we touched the halfway back long here, or very close to it. So just not a lot of follow through happening over these last couple days, and so not really a reason to get discouraged. Just there's just not a lot of follow through, and the breadth and the advanced decline line are telling us that when there's a internals reading of around 1-to-1, or anytime these numbers are close to 0 or close to 1. Now yesterday we did have a sustained downtrend, but if you look at the morning, I'll make this a little bit bigger, condense our time frame. If you look at the morning time frame, those first couple of hours up until even till 10:15 Mountain Time. By and large, not a lot of trending going on. All these candles, 1, 2, 3, 4, 5, 6 candles of moving sideways. Here were 3 inside bars, and so the sell-off yesterday, Wednesday, a bulk of that was over the lunchtime session, which is a little bit odd. And then in the close, we just kind of moved sideways. So a little bit uncharacteristic of the ES this week. We do have futures rollover happening here today, Thursday, and so next week will be expiration, which means we'll have both contracts trading. We also have an FOMC meeting announcement. So knowing that, and knowing how close we are, if I pull up a calendar quick here, how close we are to the end of the year, next week could be a little bit of a oddball week, sort of continuing off of today and Tuesday of this week being pretty odd. And then we have sort of a shortened week because of the Christmas holiday. And then I always take the time off between Christmas and New Year's and don't trade. So we could be kind of getting to the end of the year in a little bit of an abrupt fashion. So I would encourage you not to do anything too drastic here. And it's okay if you want to tack on an extra week off or just some time to kind of wrap up your live trading for the year, and or just dial it back a little bit because there's going to be great trades, great trending, great opportunities to come. You don't want to just whittle away at your account trying to make something happen when the market's not giving you any opportunities. So the last thing I wanted to mention, I had a couple questions about the NQ. Again, in the Masterclass, we used examples from the ES, but the NQ using like a 4-point stop, a 4 or 5-point stop would be the equivalent of a 2-point stop on the ES. So the NQ moves quite a bit faster than the ES does as far as the trade ladder goes. similar to the YM. So sometimes it can be a little hard to like grab your price, or let's say you're in a trade and then the trade ladder is kind of going crazy and bouncing all over the place. So yes, it is a smaller tick value, but just be a little bit careful that I have experienced certainly more slippage on the NQ and the YM than I ever have on the ES. So you can take advantage of the micros if you're not comfortable trading the full ES, NQ, YM, but just remember that the when the tick values are smaller like that, the price on the trade ladder can be a bit more challenging, where the ES moves a little bit slower. But you can get a nicey tick chart here by just adding, at least in Thinkorswim, just adding the \Q to your symbol. And then same for the breadth and advanced decline line. You can add UVOL, DVOL, and then just put /Q at the end, and then advanced decline /Q, and then you'll have the same market internals, nicey tick, and all of those readings. So the NQ can be a really good market to trade. I know a lot of people like to trade it, so just a couple of tips that from things that I've experienced over the years. So I hope everyone has a great rest of your week. If you have comments, questions, leave them in the comments below. And if you liked the video, give it a thumbs up. Thanks. Have a good one.